Hey everybody, welcome back to the channel. Today I want to go over the London Silver Bullet session on June 27th. So ICT came out with a video about the different sessions on what he looks for liquidity to take out a previous session high or low and then a reversal during the Silver Bullet sessions. So this line right here is actually, let me zoom out here, is actually the PM session from Monday. So Monday from 1:30 until 4 p.m. Eastern Standard Time. That's this range here, and then I drew the lines out all the way over to the London session, okay? So here is the 3 a.m. to 4 a.m. Eastern Time. This is the London Silver Bullet session. So obviously when we start, we're close to the high and we take out the high, so we're grabbing liquidity here. Take out the high, we come up and we'll just mark that buy side liquidity taken. You can mark it here, you can mark it over there, but let's see how this comes right to it, so it's a perfect line. And then we come up and we're looking for a reversal, okay? So we need to have a market structure shift and then come up into a fair value gap, okay? Now you can also, ICT also shows where you can take out a short-term low or swing low. So here is a swing low. There's this candle, and this candle is above this low. So this is a swing low here. So when that gets cleared right there, we would look for displacement. Is there a displacement? Yeah, there's an actual gap here. There's an actual fair value gap here. So there's a fair value gap. So you could, this is an aggressive entry. There's no market structure shift now. Market structure shift would be this candle right here being taken out. That's the swing low that took out this swing high, this swing high. So that would be the market structure shift. This is just a short-term low being taken out. So it's a short-term low, it's a swing low getting taken out. So this is an aggressive entry. Enter at the beginning of the fair value gap, and where would your stop go? It would have to go above the third candle, the first candle, which is this candle right here. I'm sorry, this candle right here. You're so close to the high, I'd put it one tick above the high. Especially with it being such an aggressive entry, and it's only two handles. You're talking, $100 in the S&P. So, as for risk on one contract. So where would you target then? Let me scroll this in a little bit. You would target this here for 5 handles. ICT says 5, preferably 10. Now, on the strategy session that he had, we can go up here. He said that when he takes out off this box, if you take out the high or low, you'd be aiming for this target down here. So ideally, we'd be aiming down here, but now I can scroll down and it never gets there. But on the silver bullet, when we're mixing that sessions with the silver bullet, we're aiming for 10. Okay, but we only take 5. This would be your target. This would be your first drawn liquidity here. And I'd take partials right here. I like to take partials about 60%. So I'd put my partials right here. And then we would trade. Now, do I see a market structure shift? Yes, I do. When the price comes down, it takes out this low. Now I have two relatively equal lows right there. But then when it crosses through it, it breaks that market structure shift, because this is the swing low, took out the swing high. So when it breaks that, I'm looking for displacement. Do I get it? Absolutely. Starting at the top, you have a fair value gap there, then you have a volume imbalance there, and then you have a fair value gap here. So where would you ideally want to get in? You'd want to split the difference and get in somewhere in this range. Okay? And that's 3 PD arrays holding down price. Okay? Now, this candle would go down, you'd take a partial here, and then you'd get out there, so you'd actually get out right there. On this candle, you'd get out in right here, and you'd come up, it would just tap that bottom of the volume imbalance, but doesn't go into it, and then it would close right there, and that's where I'd get in, right at the close. So that's where I put it, right at the close, right there. And now your stop has to go one tick above the first candle. Let me do that. Above this first candle, one tick above, right there. Okay, now this whole fair value gap and the volume imbalance were remaining unfilled. So we want them to stay open. So you could actually lower your risk and be, one tick above the fair value gap. But my rules are usually the first the first candle of the fair value gaps. So I want to go be protected. So I have both of these in favor of me. They got to cross all of this to take me out, which I feel very confident in. Again, you'd aim for 10. I only need 5. So that's where you would get in. Your draw on liquidity would be here. Let's move that over. You got these relatively equal lows right here. All this liquidity right here. You could aim for this down here as well. Move this down. You could aim for this as well, which would also be these relatively equal lows as well, because I would have gotten out right there because I would have aimed for 5. That is your silver bullet session for June 27th.